Well, perhaps the only thing more iconic in New York than the view behind me is this, the Empire State Building. And now, Qatar's wealth fund has just bought a stake in the company that owns it for a little over $600 million. Our John Defteris has all the numbers for us. He's with us out of Dubai today. John, what have you got? What do you make of all of this?
Well, it's very interesting, Becky. This fits right into the strategy of the Gulf states, including Qatar, to own trophy assets. But with this transaction, it gives them a lot more. Yes, the Empire State Building is a trophy asset, but with this near 10% stake for $622 million, they get a broader portfolio because this real estate investment trust that owns the Empire State Building has some 1 million square meters of property in Manhattan, north of Manhattan, and even stretching into Connecticut. Now, why is this important, Becky? In October of 2015, Qatar announced that it would invest some $35 billion by 2020 into the U.S. real estate market. Lo and behold, in less than a year, they've covered more than a quarter of that. And it's interesting, the CEO of the Real Estate Investment Trust said today they're very happy to be able to plan for the future with this investment, and that Qatar is a reliable partner. There's a widely perceived view that the Gulf states like to take their oil and gas revenues, splash it into trophy properties, and then run away in a few years. That's not been the strategy of Qatar. And it's interesting, even with the gas price squeeze right now that they're facing, Becky, they're putting more assets into reliable properties that pay off a yield.
Just how important is it for Qatar and these other Gulf economies to diversify beyond energy at this point, John?
No, I think it's vitally important, Becky. There's a couple of key points to make here. First and foremost, Qatar led the charge by the sovereign funds. They've been prolific real estate investors for the better part of a decade. As you know, in London, they owned modern buildings like the Shard in the City of London. They bought Harrods at the department store, the former U.S. Embassy in Mayfair. They bought assets in Rome over the last couple of years, 3 major hotels on Via Veneto, and stretching to Milan after they had the Expo. They love mature markets that are bankable at this stage. With record low interest rates, they have to put their oil and gas revenues to pay a dividend. But as you suggest here right now, we're facing a new energy reality. So Qatar and the Abu Dhabi Investment Authority need to go to markets that are safe right now with stable currencies like the U.S. dollar, but they can't rely on U.S. treasuries because the yield is just not there at this stage. And I think it's also very interesting, they're trying to readjust their budget, so they're faced with a squeeze locally. But I think this young Emir, Sheikh Tamim bin Hamad Al Thani, is following in the footsteps of his father to be quite aggressive in terms of the overseas investments, but not put a stake in, look at it for 2 or 3 years, and leave. They're sending the message like they have in Europe and to the United States right now. They're in for the long haul, even during the uncertain energy reality we face today, Becky.
John's in the UAE, our regular home, of course. Thank you, John.